broken down into year over year, month over month, core year over year, and core month over month. This afternoon at 12 p.m. Eastern
Sorry for
Time,
the
we get
delay,
the
people.
EIA's short-term energy outlook report
Sorry for
and more
the
fixed
delay. I
income
forget I
sales
have to go
later this
live.
afternoon. At 1 p.m. Eastern Time,
God
the
dang
US
it.
is due to sell $21 billion in a 30-year bond sale.
Forget that I have to hit the go live button. Such a pain, bro. It's like start streaming. I am streaming. And then it's like it should be. It should be live. It should be there. And it's not. So glad I actually come here. Alright. They're gonna be doing it. That's great. If you guys are looking to learn a little bit more information, this guy's are great. I'm gonna do a post. Stuff. Right. CPI data, Wells Fargo. Let's see what JP Morgan says. We always pay attention to what JP Morgan says, and then
So keep in
you
mind as well,
don't
our
do
very
what they
own
say.
Tony is currently going over some prep ahead of the CPI release this morning. So we've got a live video on the feed for anybody interested. So again, if you want to follow Tony's prep along live, the live video is on the feed. He's just going over some of the fundamentals surrounding this event.
Sorry for the delays, everybody. I thought I was streaming. It turns out I wasn't. I forget to hit the go live button every time. And now this time, I should put my last couple of streams I had like my profit and loss on the daily there. I did it for the Nvidia trade. That was nice. Continue to do it in other. Right, the people that are interested, I've shared it with, which is great news. Smaller, so you can join. But yeah. So, interestingly enough, we listen to what JP Morgan says, and they just do the opposite. That's a fact. That's how you make money in the markets. There's Jamie Dimon. Swear to God. And do the opposite. All right, so the only thing that he's good at is making his stock go higher. That's it. He's good at that. Everything, and he does everything he needs to do in order to get that done. That's the reality. Rents negotiating in the marketplace rising by only 1.2% over the past 6 months. But rent is the thing that's driving CPI. So if we do see a decline in that, we're gonna see major declines coming up, which is amazing. Let's see this particular case. Well, core goods prices have increased by 0.1. Client issues are resolved. They're actually going the other way. Just kidding. But oh well. Slowly but surely we get turning to everything else. Expect your expectation. We're expecting by April we get to 2.3%, which is not the 2% target that the Fed wants. Why would we? The previous release forecast was came in lower than way lower than yeah, came in lower than expected, which is great news. Like we are coming in slower. The pain is still there for the consumer because I mean prices are coming up higher than normally expected, but at least in America, like the Americans are definitely not used. But out of the game. Some lights here. Make it a bit. But yeah. Mara's bouncing back. Is fantastic news. We're seeing a move to I think safety again, right? The big seven and crypto. Crypto bounced back. There was definitely a correction going to 40k. Bounced up to 40k. If we break off the 40s, it becomes scary. because of the psychological levels, and then 38 is the moment you have to sell it all. But I do think we're still in an uptrend, which is kind of nice. Um, Treasuries are stronger today, and the dollar is down, so everything is leading towards the idea that CPI is going to come in softer than expected. At least the market is prepping for that. Yesterday did not. A lot of traders went against that trade, and a lot of people sold off before any meeting came out. Because we have a sequence of events, and it pretty much starts today, and then it leads on to the next couple of days. Any bad CPI reading could lead the Fed to be like, "Hey, look, we're not thinking of cutting." That's sort of a given, but then the big question happens is like, we are definitely not cutting, and becomes more hawkish. If that happens, we are definitely some some like some downward pressure in the markets, right? Wells Fargo, let's have a look. They're expecting core to remain at 4%. That's scary because like they don't like that. The Fed doesn't like that, right? Like oil and all and food and all those things is kind of be volatile, kind of to be negative, but today we might get some important opportunities to kind of get in and apply, like put in a little bit of more money to work. Do have a little bit of cash in the sidelines playing with, which is nice. But yeah, I mean, if inflation comes in hot, the big question happens when it's like inflation comes in hot, and then we're expecting higher inflation in the couple of months. But it doesn't seem like it, right? Not yet, at least. The question would be like, do we get the March lows like JP Morgan is saying? Unlikely. The opposite of JP. Directed broker is starting to talk, tell people what to do. That's good news. Oh, I could have bought. Oh, I could have bought. Hey, hey, I buy it right now. Look at what happens. I think it's just like, oh, it's so uncertain right now. What's gonna happen? We have 18 minutes until the new. You get him. This will happen. We could see a downward in the dollar, which would be fantastic. Yields coming down, which would be, and then we see some sort of upward momentum in the S&P. That's what happened last time, right after. So that's what we are looking for today. Now, if that happens, the thing is just what happens if it comes as expected. And some of the people are actually talking about the possibility of getting a gap and crap. So we go up a little bit and then we come down because expectations is priced in. Put it on. You know, people are talking about potentially. Let's have a look. Sort of idea what level testing. Nvidia showing a little bit of weakness into the open free market, really. Don't recall. CPU as intended. Now, seeing the bounce, like we are at high level. deeper. I think. Sorry for the lines, by the way. You have meaning. I mean, we're breaking. We're sort of hitting our level of resistance right now. Breaking through a level of resistance. High. Bounced off. We're resuming the highs. If inflation data comes out, we could see like going into the time highs, which wouldn't be a bad move to. But it's all about inflation data today. FOMC tomorrow. Powell can come and just be like, "Look, guys, you guys are getting way too excited," and then he becomes very dovish, and that's definitely. So yeah, CPI tomorrow, like today. What else? We have the 30-year. This can cause some sort of stir up. Was that last time? I was gonna expect it. That would have you made it. You could have made quite decent that with that jump. Um, we get UK GDP tomorrow. Very interesting for the pound. CPI and core PI. This I like to look at this number too. So probably gonna be streaming to get like of what it's gonna be, and then I want to stream the FOMC tomorrow. But this one's gonna be interesting because usually input prices has a lot of effects in what future inflation is, and I think we're seeing a major decline in. We are seeing some even going lower in this would be a little bit of deflation in commodity prices would be fantastic. Or inflation data. We'd have to see what actually happens after that, because then we see usually what tends to happen is that whenever you see some sort of inflation, people don't want to much because keep cash because you're getting less money, so producers will start producing less, and then you get to the point that it's like demand continues to grow, continues to grow, continues to come back up, back up, back up, and you get to a point where you don't have enough, and then you have this investment into production, and then we go again into the cycle of like, oh, we started producing more, now we produce too much, because we never get it just right. It would be fantastic if we got it just right, but we don't. Then we got the interest rate decision. This will drive markets for sure. I mean, pretty much a given. I think it's going to be a nothing burger until Jerome Powell speaks, which will be at 7:30. And then we have to see whatever he says because they grab they'll put on the smallest little words and see what he means. What is he talking about? Outrageous. And then we go into the ECBs too, so we see how the Europeans are gonna react to the interest rates of the Americans, which is likely gonna be change. And then we go into retail sales. Retail sales, we're expecting lower than expected. Apparently, we could see even lower. Apparently, Black Friday was not as good as it was intended to be. So, are we seeing the decline of the consumer? And if we start seeing the decline of the consumer, the hype that we're getting from CPI today is going to be overtaken by recession fear. And then we have Eurozone information, which I mean, it matters, but right now the European zone is kind of hurt. They're always going to be more hurt than sure. Ooh. There any major liquidation? People shorting? You imagine shorting at like Q. It's like gonna open. We are 10 minutes away from the data release. It's funny if you extend this. Right on the money. Here we try to bounce off, but money can't. That rally, that's why you gotta have a long-term portfolio because you don't know when this happens. You don't know when a couple of hedge fund managers just got it wrong, and next thing you know, you gotta get in. That's why you slowly sell into target levels, and then Qualcomm apparently did really good today.
So in 10 minutes time now, at the bottom of the hour, we do get the headline events for the day, which is the US CPI print for the month of November. Year over year, forecast is 3%, with a range of 3.3% to 3% expected. Month over month, the forecast is a flat read at 0%, off the prior flat 0% as well, with the range seen at 0.3% to minus 0.1%. US core CPI year over year forecast at 4% from the prior 4% as well, with a range of 4.2% to 3.9% expected. And the core CPI month over month forecast is 0.3% from the prior 0.2%, with a range of 0.4% to minus 0.1%. So, looking to a note from Wells Fargo, who expect lower gasoline prices to hold the headline rate of inflation flat in the month of November, and forecast the core CPI, which excludes food and energy, to rise 0.3%, signaling slower progress on underlying inflation. A miss to the upside may drive a market reaction sparing higher yields, but we ultimately doubt the CPI data will materially change the outcome of the Fed's meeting. So, again, according to Wells Fargo, where it's essentially universally expected that the FOMC will elect to keep rates on hold. So, if our CPI forecast is realized, the annual rate of headline inflation would slip to its lowest level since March 2021, while the core rate would remain unchanged from a month earlier at 4% year over year. So Wells Fargo note that some payback after volatile travel-related declines in October will be responsible for some of the rise in core inflation, but they note that other areas should decelerate further, including primary shelter and goods prices, which look set to decline for the sixth straight month. So Wells Fargo notes that while inflation pressures continue to subside, there is still ground to cover before declaring victory.
Yep. But yeah, I do think we're gonna see a decline in shelter. Hopefully, shelter. This would be nice, like because of the important thing here is because of total weight of it, right? It's like 34% importance of it. So that's where if we see the most decline, we could see major downsides to the CPI read services. Apparently, medical services. I think energy, because energy has a low weighting, but energy has been coming down. Gasoline has been coming down massively. So we're 7 minutes away, everybody. In current trades, right now we'll be looking at. If you want to go in conservative, go S&P 500, go to Qs. If you want to go a little bit more risky, pro. Natural gas has been down too. Huh. Leíste, 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 leíste. Lee la puerta. So you know. Me lo imaginé. Yeah. Mm-hmm. Look. So yeah. Let's have a look. Natural gas. Natural gas is being underperformed. Now that we're coming out of winter. People are maybe ending their bets, but and then oil is still flat, which is so sad. But today we could see some sort of like benefit maybe. from it because we're really not heading into a recession. CPI is getting fixed. The Fed will cut rates, inflation, So it's like right now, I think it's just like maybe you start placing your positions in oil and leaving them long term. It's going to be beneficial. But if we do see the recession at the start of the year, you don't want to do that. You want to stay away from that.
So in 5 minutes time now
But
at
yeah,
the
we've
bottom of
seen the
the hour,
decline
we
from
get the
7.
headline events for the day with the US CPI data for the month of November. Year over year, forecast 3.1%, prior 3.2%, with a range of 3.3% to 3% expected. Month over month, forecast sees a flat read at 0% from the prior flat read of 0%, with a range of 0.3% to minus 0.1%. Core CPI year over year, forecast 4%, prior 4%, with a range of 4.2% to 3.9% expected, and the core CPI month over month, forecast 0.3%, prior 0.2%, range of 0.4% to minus 0.1%. So, a quick note from JP Morgan's Dr. David Kelly, who notes that food prices soared in the recent years due to fiscal stimulation and disruptions caused by the pandemic and Russia's invasion of Ukraine. However, JP Morgan note that these effects have now faded, with sluggish global growth. Food prices should only be moving modestly higher over the next 2 years. So futures markets are even
500
more
Bitcoin.
bearish on energy prices, according to JP Morgan, predicting a gentle slide in oil prices over the next 2 years. As for shelter and rents negotiated in the marketplace have been rising at only 1.2% annual rate over the past 6 months. So JP Morgan note with very slow demographic growth, a squeeze on the budgets of lower and middle income households, and a significant increase in the supply of new multifamily housing, JP Morgan expect rents to continue to grow only very slowly. So this is particularly the case since the average rent on a new lease is still significantly higher relative to disposable income than it was before the pandemic. So JP Morgan note that turning to everything else, core goods prices have risen just spot 1% over the past year. With supply chain issues largely resolved, this could continue into next year and 2025. Meanwhile, a large reason for sticky core services inflation has been huge price increases in insurance and auto maintenance and repair. So JP Morgan expect these trends to fade going forward since new light vehicle prices have been rising at less than 1% annualized rates over the past 9 months. JP Morgan also don't expect a significant flow through from higher wages as wage growth decelerated to a pace of just 4.1% year over year in the month of October, just 0.9% above the CPI inflation rate.
Oracle is down 10% today. That could be a catalyst for chips today. Apparently, cloud is not doing so good. All right, everybody, 2 minutes away. Stay frosty. Get moves. Legends off. Right. Have a look and see what happens. 2 minutes. Let's be opened. This is where the numbers are going to appear at the bottom. And we see the market reaction from 1 minute ago.
1 minute remaining now. I'll lead with US CPI year over year.
There we go. Have a look. We're going to see how the market moves. It's going to be interesting. We're going to see the market move just before, too. Pretty steady. There's nothing happening. 20 seconds. No. We'll see. This number tells us whether
10
we see the
seconds.
center rally or not. But I'm kind of scared. The Oracle scared markets today, so I have to dig into that a little bit. How it moves. Traders are getting in. Traders are getting out. Ooh, that's not good.
3.1%, 3.1%
That's
as
expected.
expected. CPI month over month. 0.1%,
Ooh, US CPI
0.1%.
hotter
That's
than
higher than
expected.
forecast. 0%. Core CPI year over year at 4%. 4% as
Oh,
expected. Core CPI month over month at 0.3%. 0.3% as expected. Looking to the markets, some whipsawing in the dollar, seeing some downside movements overall though, and some strength in the S&P 500
yeah.
as well.
S&P is
So
showing
again,
a little
US
bit of
CPI
strength.
month over month headline coming in higher than expected at 0.1% off forecast of 0%.
Now the scenario here is we could see the market rally pre-market because they likes this news. I mean, people were preparing for the opposite to yesterday, so we could see some buying and then selling at the open. Um, sure.
US short-term interest rate futures rising after that CPI report there as well. Treasuries are holding their gains following the CPI rising more than expected.
Nothing major. The story doesn't really change because of these numbers. We just got the number, so let's read. Yes, to say.
But it's a blessing in disguise, Becky.
So the yield on the
we haven't
30-year
been
US
below
Treasury notes down
4%
7
Becky,
basis points
since May
at
of
around
2021.
4.26%.
All right, let me listen it over. Let's actually go into the report here.
The 3
Looks
months
like
is
shelter continued to rise really in November, offsetting a decline in gas.
Spot gold also extending gains after the
Energy
CPI report,
fell
last up around 0.7%.
oil pumping because of the news? Let's see.
percent over the month as a 6% decline in gas more than offset the energy increases. Food index up 0.2%. That's fine. After rising 0.3 in October, food at home increased 0.1%. Away from home 0.4. Index
Load,
for all
load, load.
other items
You can do this. I believe
after
you.
rising 0.2%, rose 0.3% in November after rising 0.2% in October. What increased? Rent, owner's equivalent rent, medical care, motor vehicle insurance. They're the ones I was talking about. Still increases over here. Let's see how much. The indices for apparel, household furnishings, operations, communications, and recreation were among those that decreased. The all items index, 3.1% for the 12-month ending. It was a little smaller than what we had before.
Let's look at rents. Back up. No, no, no. All right. Yeah, it's back up a little bit. That sucks. Oh, yep. Higher services, less higher than expected. Shelter is higher. That's not good. Damn. Wow. Okay. Gasoline way down. -6%. So it's still coming in lower. Oh, it's gonna affect the company. Well, I mean, it's holding flat so far. Well, energy still. Oh, energy is higher, a little bit higher in November. Oh, I wouldn't have expected that. I thought it was. Now with this, it's tricky to say. Market's undecided about this. Like it just you see, giving back all of the gains, and we're actually a little bit lower before the news right here. We are coming in lower, so we could see a negative day today. Now the question is, where do we see the movement? Nvidia down 466. Bitcoin showing a little bit of strength after this, which is good, I guess. I mean, I guess we're probably going to see a reintroduction back into the recession trade. Not too sure. Today's a tricky day. But yeah, market doesn't like it. And I agree with it. I mean, like we were expecting to go in lower than expected. Sure. Yeah. I mean, it's a little bit hotter. It's still in the right path, I think, right? Like we should have seen it like my expectations was that we were gonna see it a lot lower. But it's still within guidelines, so that is a good thing. It's expected. So yeah, interesting. One hour is higher. I don't. Market's undecided. It doesn't know what it wants to do. It's such a tricky place that we're right now. Everything is pointed to different directions. Consumer is pointing to recession. Inflation is pointing to recovery. The Fed is pointing towards. So we're not done yet. And the one thing that does scare me, which could cause a lot of panic today, was it's this right here. Oracle down 9.34%. Which could lead the whole sector down. Look at what? Cloud growth concern. Scary. Oh, scary. But yeah, be careful today in markets. We don't know what the market really wants to do. I think we're gonna be chopping range. Nothing major is like being created. So. A lot of hype, but dollars holding steady probably. Oh, weird. I can No major moves. I mean, nothing, nothing really did anything. Oh man. Well, everybody, thanks so much for watching. If you have any questions, leave them on here. Leave them in the comments. Thanks so much for tuning in and watching. Bye, everybody.